what Layer3 is?
Answer is that we try to be like a Google for crypto. We try to be like a matchmaking engine between businesses and crypto. Businesses are either chains or apps, and then consumers. But we basically have a platform that owns a direct relationship with the end consumer, and consumers can come to Layer3.
This material is for informational purposes only and is not intended to provide accounting, legal, or tax advice, or investment recommendations, or an official statement of Presto or its affiliates.
Hello, everyone, and welcome to the Presto Research Podcast. I'm your host, Min, joined by my colleague, Jaehyun.
Hey, guys.
And today we have a very special guest here, founder of Layer3, Brandon. Brandon, how are you doing today?
I'm doing well. Great to be here. Thank you for having me.
So as usual, why don't we start with your personal journey? Like, how did you get into crypto and how did you start Layer3?
Yeah, it's a great question. So I started my career on the investing side at a firm called Accolade Partners, which is about a $5 billion alternative asset manager. So I joined the firm in 2014 when I was at undergrad. So I was studying economics at the George Washington University in DC, and I was looking for internships. And so I'd gotten connected with the folks there. And Accolade invests across the alternative asset class spectrum. So venture capital, growth equity, private equity, buyouts, et cetera. And they had two sector focuses, technology and health. So when I joined, I was covering all stages of all like venture to buyout and then tech and healthcare. And we were one of the larger limited partners in Andreessen Horowitz, dating back to when they had raised their first fund. So fast forward to 2017, I'm still at the firm. Chris Dixon starts to pick up the phone and call LPs. And he says, hey guys, I'm starting to think about crypto. And so at the time I remember the very first call, and I think we were one of the first calls Chris had made, thinking, this is super interesting because I think, all of us are probably a similar age. Crypto's, it's like interesting to anyone who's young, particularly people who had read the Bitcoin white paper. Your mind is just a little bit more open to new ideas. And so I thought it was super compelling, but it didn't make sense for us to put that fund in kind of a commingled vehicle. And so what we ended up doing was raising a special purpose vehicle. So we went to like our LP base and we said, do you guys want to commit to this fund individually? And there was a lot of demand for it. And so that clearly signaled to us as like a firm that there's a lot of institutional interest in crypto. And it also makes sense to pull together a fund of funds vehicle. The reason being, if you're an endowment or if you're a family office or you're a large institution, maybe you're going to put 1% of your total exposure into crypto, but you're not going to put that much, right? You're not going to go and put 50% of your portfolio into crypto funds. And so it doesn't make sense for you to get to know each of the individual managers, like to spend time with Chris Dixon at Andreessen or Olaf at Polychain or the guys at multichain, because you're not putting enough of your fund into the portfolio. So instead, what you might want to do is back a fund of funds. And that was the product that we wanted to bring to market. So we did that. COVID started to happen. Rates went to zero. It was mania. You guys were probably around. Everyone was making a lot of money. We raised our first fund of funds. And I was looking at the asset class and, at the time had been a big fan of the writing Ben Thompson had done at Stratechery. And he had been popularizing this thing called aggregation theory. But the basic idea was like a framework to understand the largest businesses of the internet. And anyways, I was, like you guys, probably trying to find things to do in crypto. Like as a consumer, I was like, oh, what's the next DeFi protocol I want to use? What's the next, lending protocol? Where are the best rates, et cetera? And it kind of occurred to me that there was not a very good matching engine between consumers who had a motive and then protocols that wanted to find users. And that idea was really exciting to me. And I had always been interested in entrepreneurship. I'd always wanted to build a business. And so I decided to leave the firm in September of 2021. I'd been connected with my co-founder at the time. We decided to start Layer3 and we raised a $2.5 million seed round then. So fast forward to today, we're about 4 years into our journey. On the last 12 months, we've done about 25 million in revenue. We in total have raised a little over $20 million in capital. Got a great investor base, launched a token last year. And so, the business in and of itself kind of is a matching engine between consumers and protocols. I'm sure we'll talk more about it. And that was long-winded, but that's my journey. And, hopefully that's a good starting point for the conversation.
Just curious, in 2019 and 2020, what kind of crypto funds were out there? Was it multicoin, polychain?
Yeah, it was a lot of those names. The funny thing is that the industry was a lot smaller. And these guys hadn't developed, I guess, the track records that they have today. So they were a little bit more approachable. So I remember being at the multicoin offices in Texas because they had an office in Austin and like Solana hadn't broken out yet. So like they were still kind of trying to prove themselves. And that was a great conversation. Polychain had an office in San Francisco. So my job was literally to fly around the country and get to know like who the best funds were. So if you guys know a fund called Variant, Jesse Walden, I had met him before he even started the fund. I was on this Coinbase hosted, and this is a sign of the times. In 2018, Coinbase hosted a ski event and it was like and nothing. It was like 30 people showed up to the ski event, and one of the people that showed up to the ski event were Michael and Vance from Framework, and they were still investing out of a $15 million fund. Now I think they manage a few billion. And I, met them then. So it was just a fun and special time in the industry. And now things are way different. And we've got mega funds and, it's just totally different. But it was a great experience for me too.
Yep. So for the viewers who don't really know about Layer 3, how would you explain what Layer 3 is when what you guys are building?
Yeah. So I often get the question, how would you describe this to my parents or my mom? And the reductive answer is that we try to be like a Google for crypto. We try to be like a matchmaking engine between businesses and crypto. Businesses are either chains or apps, and then consumers. And so we do that through kind of a few methods, but we basically have a platform that owns a direct relationship with the end consumer, and consumers can come to Layer 3 and they can say, I want to explore DeFi protocols. I want to explore NFT marketplaces. I want to explore games, and we'll curate the best things for them to do. And then on the other side of that, we have a relatively sophisticated matching engine where if you're a protocol or you're a chain, you can show up and say, I want to reach this type of user. I want a user who has a wallet balance of 10,000 or more that is very active on these chains, and I want to target and reward them. So you can think about the simplest answer is kind of like a Google or a Facebook, or kind of an ad engine for crypto. Over time, we've really built, I think, a pretty sophisticated targeting stack. So we have a native credential that allows us to say this user is has a propensity to be a really retentive user on perps protocols, and therefore you want to reach them if you're building a perps protocol. And we also have infrastructure that allows apps to take their token and reward their token to users based on what they're doing on a progressive basis. So you guys all know airdrops are kind of a broken meta. They don't really work. They cause very low retention. So what you can do with Layer 3 is you can say, okay, I've got, $100,000 worth of my token, and here are the outcomes I want. And I only want to reward users if they take these actions over a period of time. So it's just, in our view, a better tool. And we work with a bunch of great ecosystems. So we work with Base, we work with Optimism, Arbitrum. We work with some of the fintechs too, like Robinhood and Revolut. So we've got a pretty diverse customer base.
Can you explain what users can do on Layer 3?
Yeah. So you show up to Layer 3 and there's levels, right? So let's say you've got a buddy who you went to university with, doesn't know anything about crypto, and says, hey, I want to learn about DeFi. They'll come to Layer 3, they'll select beginner, and then we'll show them how do you make your first swap on Uniswap? How do you provide liquidity? How do you set up a wallet, et cetera? Then we go all the way to advanced, right? And advanced is more I'm a very sophisticated user. I'm trying to find the most compelling opportunities on chain. I'm trying to find the best yields. I'm trying to find the best things to farm. I'm trying to find the best games to play. And so we curate those opportunities for them. Now, on the other side of the business, what we're doing is we are working with these ecosystems and these apps, and we're saying, hey, we're going to help you acquire users. And they'll say, great. And Base, for instance, says we want to drive a lot of transaction activity across the consumer layer within Base. They pay us on kind of a monthly basis. And then we curate these things called activations. So that's the core discovery part of the business. There's also, I'm sure you guys are probably paying attention to Kaido and this InfoFi meta. The issue with Kaido is that it's all off chain, right? And so you end up rewarding a lot of users who never touch your chain or your protocol because they just spend a bunch of time on Twitter, which serves its purpose. I'm not talking down against them, but we have a product called Layer 3 Signal. And what Layer 3 Signal does is provide on-chain relevance index. So it shows you when things are heating up. And this is really exciting for ecosystems because they'll come to Layer 3 and they'll say, well, I want, to have a better score on our on-chain relevance index. And so that incentive that they have fuels the other side of our business because they want to then drive growth. They drive growth through Layer 3. They have a better score. Exchanges take a look at that. Liquid funds take a look at that. And there's just this really powerful flywheel that kind of exists. So yeah, those are the two core components to the business.
I see. I think it's by looking at you guys' protocol, I think it's impossible to discuss about Layer 3 without discussing about cubes. So can you just explain a bit about cubes to our viewers?
Yeah, so between 2021 and 2023, we drove a lot of transaction activity, but it was very hard to prove to the market what we were doing because users would take these actions, and then a protocol might say to us, well, how do I know the user took the action because of you? And we'd say, well, if you look at your activity, it's not like your activity was great. And then you ran something, but they'd push back. And we were like, So we started to look at traditional internet models and, how do you prove attribution if you're a traditional ad engine? There's this concept of like a pixel. I'm sure you guys are familiar. And so the initial framework was, how do we bring a credential to market that proves attribution to us, where you can encode the actual transaction hash of the action the user took. And you can say, okay, that happened because of layer 3. And programmatically, the way we decided to do this was we take the block number upon which a user saw the activation, and then when they take the transaction. And if those two are within a reasonable amount of time, we're able to claim that the user took the action because they saw the activation. And so what CUBE stand for is Credential to Unified Blockchain Events. And the reason that we named it that was because users often will take multiple actions in a given quote unquote session. So I might swap an asset because I want to go and, stake it or provide liquidity, right? And that all is one unified action. And a lot of these protocols, it's not just one on-chain action that they want you to take, it's a combination of actions. And so the CUBE captures that. And in order to make it anti-Sybil resistant, or Sybil resistant rather, you have to spend a small 25-cent fee. So it's also a monetization engine for layer 3. And so it serves those two purposes. And since we launched it in early 2024, about 65 million credentials have been minted across 45 different chains.
So it's like an NFT format of a certificate for user activities.
Exactly. And it can be used to retarget users with additional rewards, and it unlocks opportunities for that specific user over time.
I see. Great. So then a bit of like from a systems perspective. So I heard that you guys service in like over 40 chains and over across tens of ecosystems. And
yeah.
So then there's one curiosity that how do you process those all those mission activations and minting cubes in a way that perform at scale? So is there any middleware or any kind of you guys know how that everything does in scalable way?
It's actually, I don't talk about it often because I don't think it resonates with everyone, but it is a very complex part of the business because there's all this infrastructure that serves new chain rollouts, right? You've got indexers, you've got your block explorers, you got your on and off ramps, you've got your bridge providers, you got your interop, right? There's this whole ecosystem. And I don't know where you guys stand on the debate around whether or not we need more L2s or less L2s. And we can probably have a whole podcast on that. But for better or for worse, these things got funded, right? And so we're unopinionated. We're we'll serve you as a customer. But users need to get to those chains. And then we also need to handle the accounting, and we need to handle the revenue, and we need to handle all of the load balancing and so forth. So we've worked, over the years, we've built really strong relationships with different data providers. And this took a lot of work to basically package our offering with theirs so that when we start to work with a new ecosystem, we make sure that we've got all the things that we need: block explorers, indexers, good interop solutions. So we work with Wormhole and Layer0 on interop. We work with Dune on the API and indexer side. On the accounting side, we haven't figured that out yet because a lot of these accounting solutions don't cover the long tail of chains, but we're getting better at it. And then on the performance, it's interesting. If you go to layer 3, you can actually see the platform live. There's this feature in the top right that shows how many credentials are being minted in real time. And so sometimes that's spiking and we have to handle performance issues, which is obviously a good problem. But by and large, I think we've scaled to a point where we're in a good spot on that.
I see. Pretty impressive. Okay, so now back to some more casual questions. maybe you've heard this question a lot from other interviews or any kind of podcast as well. We're really curious about the reason why did you choose the name Layer 3 on your project? Because since other people now these days, not back in 2021 and 22, but now these days people kind of use it to describe some application specific chains as L3, or there's some kind of overlap with technical layer in network architectures as well. So and I also saw that you mentioned that Layer 3 means people to you in other interviews. So I wanted to ask you what is the main key reason that what made you to choose that name for your project?
Well, I applaud you for doing your research. So I actually didn't name it. My co-founder did, and the initial conception of the business was to help coordinate like talent within communities like DAOs. And like the app specific thesis or the app chain or the layer 3 from a technical perspective had not been articulated. Like layer 2s were actually just beginning to be talked about in like specific technical forums back then. Optimism hadn't launched, Arbitrum hadn't launched. And so it was kind of a play on words, which was, you know, you've got your base layers, you've got your scaling solutions, and then at some point we need users, right? And so what's that layer? We kind of layer 3, right? Like that's the user layer. And the name kind of, it does speak to that with the business. Like the North Star of our business is how many consumers we own and are connecting with protocols. Like how many consumers come to layer 3's core interface. And so, you know, if you were to imply that there has to be a consumer layer, hopefully we're capturing that. Over the years, I guess I haven't discussed this on other podcasts, so I'll give Presta some unique content. But you know, I mean, look, we've played with name changes, but at the same time, I think there's some brand affinity for layer 3 amongst our core base, and we've decided to kind of stick with it for the time being. We have incubated other brands that are, you know, newer and they're like serving different audiences, but the parent company or like the core brand itself is layer 3.
I see. That's such an impressive answer. Okay, so this is like last question from my side. Min has more probably. So maybe a bit sensitive question as well. So actually, in this industry right now, Layer 3 is not the only protocol that kind of works in this kind of like reward aggregation protocol, right? Like there's Galax, Zeoli, BitDegree, something like that. There are other some like protocols that is offering some gamified rewards and campaigns. So what differentiates Layer 3 from them in approach or product philosophy or value delivered by the protocol and users?
Yeah, it's a great question. And yeah, I mean, it's not controversial. Like at the end of the day, I wish we were not compared to them because I do think our products are quite different. But here's how I've answered it in the past. And I think this might be relevant for your audience, which is we are often asked if Layer 3 is the cheapest or the lowest cost option to customers. And the answer is no, right? But I do think are one of the largest by users that we have on the platform. And so how do you square those two? We price in a premium way, but we have the best quality users. And the primary reason I bring that up is because what we've deliberately tried to do is avoid like slop or spam. And so a lot of these other platforms where they really optimize is getting kind of like bots to follow you on Twitter or bots to join your Discord. And again, like I'm not on a high horse about that. I think that those are important. Obviously, like certain exchanges take a look at those types of things. It helps to have large follower base, et cetera. So I totally understand that business model. Where we've always kind of taken a firm point of view is that if we can get real users to use your product and real users to transact, not in like pennies, but in like real amounts, then we'll have pricing power, which will create a good business. And so that's what we've always tried to do. And so you can see it somewhat in our customer base. Like we work with Uniswap, we work with Unichain, we've worked with like Robinhood uses our infrastructure. We've worked with Base, we've worked with Coinbase Wallet. And I think you can only work with those types of teams if you have a really high quality consumer base. And that's what we've always strived to achieve.
Right.
And then we've also tried to, a little bit to your other question, which it's harder to kind of talk about in podcasts because I think it's less relevant. We've also built, I think, a more technical and sophisticated infrastructure stack that can achieve more for our customers, like targeting. We've got our data piece. We have multiple brands that we, are also generating revenue. But that story, I think, is a little bit more nuanced. And so it's less discussed.
I see.
You kind of talked that the part of the revenue. So I was kind of curious where the revenue is coming from and how it flows into token or whether it flows to the token.
Yeah, the punchline is it definitely flows to the token. So we've done about 25 million in revenue, and we've been profitable since about Q1 of last year. So the business, from a revenue perspective, I think is certainly in the top 25% of revenue generating protocols right now with tokens. And the way we make money, I'll try and kind of simplify it. If you think about Layer 3, there's two sides to the business. You have the consumer facing side of the business, which is when consumers come to Layer 3. And then you have the business facing side, which is like your chains or your apps. So in the consumer facing side, we've already discussed this with the credential. They have this small, basically like Sybil resistant fee, 25 cents per mint. But because so many of these have been minted, you're able to monetize that like behavior on the consumer side. We also have a trade interface on the consumer side, so we get some trading fees as well. And then on the business facing side, there are a few ways in which we monetize. If they're distributing tokens through our platform, we take a percentage of those tokens. It ranges, but somewhere between 10 to 20% of the tokens are sit on our balance sheet afterwards. And then if they don't have a token, if they're a fintech or they're a large corporate and they're just trying to acquire users, it's usually like a monthly service fee. And so revenue, depending on a given month and like what's happening, sometimes it's skews towards one side or the other, but it's relatively close. It's 50-50. Sometimes it's 60-40, one way or the other. And that's like the current revenue stream. And as for how it gets back into the token, there's programmatic buybacks. So when users spend money on cubes, so a percentage of that is reinvested to buy back the token and take that out of supply. And then there's also discretionary buybacks. So when profit exceeds a certain amount in a given month, we will basically, using a third-party trading firm, buy back the token and disclose that through a Dune dashboard.
Got it. And I guess kind of moving out from the product side and talking more about the industry in general and the trend in general, you said airdrop is like kind of broken meta.
Yeah.
I was kind of curious to hear your thoughts on how airdrop has been changing in your mind, and is airdrop still gonna be a thing in the future as well?
I'd be curious to get your take as well. So look, if you think about the history of incentivization in crypto, the very beginning, we had ICOs where people would basically exchange their capital and then they'd get rewarded with these tokens. Then we had kind of a combination of liquidity mining and airdrops. So you had like Compound come out with their famous liquidity mining. Uniswap was probably the first and most notable retroactive airdrop. Then you had points, and then you kind of had this like continuous airdrop meta. Now, when Uniswap did the airdrop, users that used Uniswap did not know they were going to get rewarded. That's a very specific human psychology. If I, let's say I, go and I use a product for, let's say I use Uber. Let's just keep that as an example. I use Uber 100 times, and then Uber says, hey, we're going to reward you with Uber stock because you did it. The first 100 times I took it, I was only using it because I liked the utility of Uber. But then every time after that, getting that initial reward, I'm always in the back of my mind going to be thinking, well, if I use Uber, am I going to get rewarded? And that fundamentally changes psychology. And it also fundamentally changes psychology when in certain parts of the world, these airdrops can cover, 1 month's rent, 2 months rent, sometimes a year's rent. And so what occurred was you created industrial air farms, particularly in emerging markets where the cost of living is quite low, but also the earning potential is quite low. And so instead what people did was they'd bridge from, assets on chain, and then they'd basically try and farm these protocols. And I think that really obscured product market fit for a lot of teams because they would play to these metrics. And then we created this whole industry around it, which is if you are, well ranked on DApp radar because of number of transactions, then certain exchanges will then consider you for a listing. And so there's all these sort of perverse incentives that I think occurred. I don't think that sustains for an inevitable period of time. I think that over time, protocols are probably going to use their tokens to reward users who actually will retain. That being said, there's always been some element of subsidized growth in the history of kind of Silicon Valley, entrepreneurship, technology. And I think that airdrops are a way to do it. I just think that they're going to get smarter and more intelligent over time. And they're going to be a little bit less of like this kind of blind, retroactive, giving $500 to a user who spam my chain type of thing. But I'm curious to hear your take. Like you guys probably have a unique point of view. You speak with a lot of teams about this.
One thing that I was curious was when you actually see Layer 3, is most of the projects pre-TGE projects or is it post-TGE? Or what's the ratio?
It's a great question. So on a quantity basis, the largest amount is pre-TGE. On a dollar basis, it's pretty well concentrated to post-TGE. So what does that tell you? It tells you that there's a lot of teams that go out and get a bunch of funding, and then they come to us and they say, well, we want to figure out growth, right? But they're not all high quality. And so they kind of they're more ephemeral, they phase out, et cetera. But then the highest quality ones are happy with what we do. And so then they continue to work with us over time. And I would imagine this is very similar to how Facebook or Google business model, right? So you get all these teams, think about SaaS for a second, right? SaaS, there's hundreds of SaaS products that go out and raise venture capital funding. And what do they do with that venture capital funding? They go out and they spend on ads through Facebook or Google because they need to find customers. But sometimes their products just don't have customers. And so they spend on Facebook and then they run out of money and they die. But the ones who do have customers or actually have a product that makes sense, they spend more and more and more because it's a positive ROAS spend. And so we see the same dynamic with our business, which is quantity is typically like a pre-TG, like a lot of teams raise money and then they come to us and they want to figure it out, or maybe they want to look good for listings. And so again, we're a business, we're unopinionated, we'll work with them, but the ones that have the highest quality products will keep with us. But yeah,
Is there a system where you guys could filter the boats and
there is.
stuff?
Yeah. So cubes, as a for instance, are a mechanism. The funny thing, and again, I don't know how much I've talked about this on other podcasts, but not everyone wants to filter bots. And
Okay.
why is that, right? Like some people say, I've got a fundraise coming up and I want my transaction activity to look good. So as I've said, we're unopinionated. We're infrastructure. If you want to make your transaction activity look good, our tools allow you to do so. If you only want to reach the highest quality users, our tools allow you to do so. And the ways you reach the highest quality users is you set wallet balance thresholds. So you say, I want users who have certain wallet balances. You have credential thresholds, so users who have a certain number of credentials. And then we also integrate third-party integrations. So like WorldCoin, Gitcoin Passport, we're integrating the self proof of humanity. So a lot of these things allow us to kind of make sure we're targeting real people.
And is there any other areas in layer 3 that you guys are focusing on instead of, I guess, Quest and onboarding stuff? But is there any other areas that you guys are building that think could be like one, I guess?
Yes. Yeah. We're always incubating new stuff. We've built a very incredible consumer capability internally at Layer 3. So we have incubated a mobile trading product that allows you to trade perps using the Hyperliquid builder codes. And that product's called Loopbase. And then we've incubated a gaming division that provides fast casual games natively on Base called Bag Labs. And then we're loosely in the early stages of incubating something that's more at the intersection of kind of AI and payments. So we're always incubating new things that we think can like expand our revenue lines. I'd say the most mature business and the one that's done the most amount of revenue is the activation business. And that's what we've been working on for the bulk of the past 4 years. But yeah, we're always trying to think about the future.
I guess in that sense, what's like the one trend or shift in crypto that you're personally most bullish on?
The trend of towards fintechs, right? So I think what has occurred in the past few months is that we've, between 2010 and call it 2016, fintechs kind of emerged, right? And we started to see, that was like when Revolut and Robinhood and some of these businesses were born, but they were still trying to build on legacy financial stacks. And then we had this period where crypto kind of like had its growth period. So call it 2016 to 2025 or whatever, where we like professionalized the infrastructure, Ethereum kind of came into its own, et cetera. And now I think we're seeing an intersection of those two, right? So all these fintechs are saying, well, stable coins make a lot of sense for settlement. People want to trade crypto. People want prediction markets. And so how do you meet the modern consumer with traditional crypto rails? And we're thinking a lot about that in the context of our own business. But I think that's awesome. And I've got a lot of friends who are now like trading crypto or using prediction markets that never would have been touching it a few years ago.
You said Robinhood was using your product as well?
Yeah. So Robinhood, in the Robinhood wallet, you can basically discover like things to do on chain, principally on Arbitrum, because they have a partnership with Arbitrum.
Oh.
And if you're familiar with like Coinbase's Earn product a while ago, or like they had this basically Coinbase had this product where you can learn how to do things on chain and get rewarded for doing them. And so our infrastructure powers something very similar for the Robinhood wallet.
What do Robinhood reward users?
It's partnered with Arbitrum, so users typically will get some ARB. Because they're building like they announced that ETC. I'm sure you guys saw it. Yeah. It's like on the Arbitrum stack. And it's things like how do you get your funds on Arbitrum? How do you make a swap on Arbitrum? Things like that. But I think it's a clear sign. Well, I think it's two things. One, I think our infrastructure, is one of the better pieces of infrastructure to do that. And the second is obviously that they're, as we all know, planting a very real flag to be a dominant contender in crypto.
Got it. And I guess we are almost running out of time. So I normally end the podcast with this question. Do you personally have a Bitcoin price target for this year?
I've kind of conservatively said that I think we might test like the 130 range. I think certain things need to go well. I mean, look, there's a tremendous amount of buying pressure in these treasury companies. And I know that the like wind or like the momentum behind these treasury companies is starting to slow to an extent, but that's one catalyst. And then you don't know what's going to happen with macro, but I think there's a chance it gets to 130. What do you guys think?
I totally agree with you.
There you go.
That's it for today's podcast. Thank you everyone for joining, and thank you, Brandon, for sharing your journey, and see you all next week. Bye.
Yeah.
Thank you, Brandon.
Thanks, guys.